What is a small business investment company? SBIC. Well, an SBIC is simply a private lending organization that receives a qualification or certification through the Small Business Administration to otherwise provide loans to businesses. That is, these groups, these private entities, these lending groups can borrow money from the federal government at predetermined interest rates with the purpose and sole ability to lend those funds to small businesses. So in order to qualify as an SBIC, the lending group must meet numerous SBA approved requirements in terms of composition, demographic area served, need-based functions, that type of thing. And there are parameters for the use of funds or the holding of funds within the organization, payment terms, things of that nature. So if the organization qualifies, again, the SBA will step in and serve as guarantor for repayment of those borrowed funds from other organizations. So if the lending group borrows from, again, an SBA secured lender who lends to them for the purpose of relending the money, if they default on loans and cannot repay, the SBA is guaranteeing payment to the primary lending organization who is lending to the SBIC group. So with that being said, there's a lot of security there and makes available funds that otherwise would not be available for the group for relending at a far lower interest rate because the risk has gone down. And it leaves room for margin. That is, the SBIC company can mark up or add interest rate points, that is, percents of interest charge to the loans they're lending in order to make a profit. That's their profit margin. Now, generally, SBICs lend between $100,000 and $250,000 loan packages, but of course, this increases over time with inflation rates and the needs of businesses ever changing. But in summary, this is the basics of what it means to be an SBIC.